Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel L. Conan, along with Brianna Valesky, and I have J.J. Kinahan on the line on the floor of the Chicago Mercantile Exchange. J.J. is the chief strategist for TD Ameritrade. J.J., how you doing this morning?
Well, Joel, thanks for having me on. Happy New Year to everybody.
Thank you, thank you. So, you're on the trading floor here, and I know that's where you began your career. Could you just tell us a little bit about your education and then how you ended up in that crazy place?
Sure. I'm actually not on the floor every day anymore. I'm just down here because I have some meetings. But I started actually in college. It was very much a fluke in that it was in the mid '80s. I was in college, and my brother-in-law's first cousin was a trader. Asked me if I wanted to go down and see the floor one time on a Christmas break. I was just finishing up my junior year of college, and I said sure. Asked his cousin if there were any runner jobs available because this was long before electronics. He hired me as a clerk that summer. I was lucky enough to come back and clerk for their group. There were about 15 traders. And the funny thing was, Joe, I made a whopping $750 a month. And as a clerk, you worked about 12-hour days or more, just making sure, because, again, everything was done by hand, so you had all the paperwork done, but it was for an opportunity to start trading. Lucky enough to get an opportunity to start trading right at the very beginning of 1986. And, things went well, and that's kind of for a kid who grew up on the north side of Chicago. I was the youngest of 8 kids. My parents and 3 older sisters were born in Ireland. And to be honest with you, I never even knew this world existed. So it was a great break, and luckily things have done very well.
Well, you did a little better than me. I started in the summer of 1985 at Iowa Grain, and
Oh, yeah.
I was stuffing envelopes for the brokers at 6 o'clock in the morning, and finishing up the runs for the out trades at 6 o'clock at night. So that's
Yeah.
funny. All right, so you were on the floor for a while as a market maker. And
Yes.
is it like one trader? I mean, you mentioned that group. Was there one group or a group of traders that you learned the most from?
Well, obviously, the two gentlemen that started me, Zach Fishman and Paul Piketty, were really instrumental in my career. I would say that I was lucky in that I was exposed to some of I stood near guys like John Stafford, Blair Hall, who were, if you read many books about options traders, they're always mentioned as the greatest traders of all time. Worked for a gentleman, Laurie Lichtenstein. And so over the years, I wouldn't say that there was one trader, but I consider myself fortunate in that I got to be exposed to some of the greatest traders in the world and was able to take a few things away from each one of them. I mean, you often hear musicians or actors talk about the fact that they had many influences and they took some things from everyone, and I feel kind of similar as a trader.
And would you trade the individual stocks in the OEX was probably big back then? Was that your
That, that,
go-to?
that's exactly where I started, Joel, was the OEX, which is the S&P 100. At the time, it was the busiest trading pit in the world. There were about 450 people in there. And to be very honest, back in the mid-'80s, there just weren't a lot of female traders. There were probably about 8 in that pit out of the 450. And it was really it was an exciting place to be. I did trade later in my career in the late 90s, early 2000s. I did go into Cisco, Oracle, Microsoft, those pits because, again, obviously at that time they were the hot tech stocks. But most of my career was spent trading the S&P 100 and the S&P 500.
Okay, and looking at what your experience on the floor and what you're doing now in your current position, well, what's the most important lesson you learned from being a floor trader, and how is it translated to your current position?
Sure. I would say that in terms of there are two things that I would say for those folks who are listening who are starting to trade for themselves or whatever and really trying to do things. And number one is position sizing. And what I mean by that is I'm lucky enough to talk to a lot of our clients on a daily basis. And one of the things that people have a problem with, well, I should be trading bigger, et cetera. And the thing is, it's very easy to become a bigger trader. I would say, even though I work for a brokerage firm, I should be telling everyone, hey, trade as much as you can all the time. But in reality, that's not going to keep you as with us as a client for a long time. So I would say to people, trade what you're comfortable with. If you want to add one or two contracts to start trading a little bigger, that's fine. But really understand your risk. And the biggest thing that I would say that I do and everything is I always want to know worst case scenario. I want to understand what's my worst risk case, because if I understand the worst thing that can happen, all the rest is sort of gravy, and I don't get panicked if we go to that worst case scenario. Am I ready to handle that worst case scenario? The amount of money, the size of the trade, etc. And I think if people start to look at things from that point of view, not how much can I make, but rather how much do I have a chance to make, but first of all, how much can I lose? I think they'll start to find that they may have more success trading because their whole mentality has switched.
And that is echoed by many of our traders and guests on our show. That's great advice, and I hope everyone just paid close attention to that. So let's talk about your transition now. And you're on the floor, you're trading, you have your ad, you're a successful trader, and you start to look at your profitability. Let's just talk about the 2006, 2007 period. Did you feel that you were starting to lose your edge? Do you feel that the machines were starting to take over?
Absolutely. The world constantly changes, and just as in many careers, if you don't continue to reinvent yourself, you become a dinosaur. And particularly with the electronic trading and just technology in every aspect of our lives, if you don't learn to take advantage of it, you are going to be left behind. I was fortunate in that Tom Sosnoff and Scott Sheridan, who started Thinkorswim, and I had been friends for many, many years. We actually played basketball together. Is how we got to really know each other for many years. And so Tom had the firm when he first started. He talked to me about coming to join Thinkorswim, and I still enjoyed being on the floor every day. There just came a day when I was standing there in 2006, and I'm like, this is kind of a waste of my time. I don't have to be standing here every day. And so Tom and I started talking again. We ran into each other at a holiday party, and talked about coming back together. And then in January of 2006, I started working sort of on weekends for Tom, teaching people about options. By May, I had switched over to full time, and luckily there was, Thinkorswim at the time was growing pretty quickly, and there were a lot of opportunities there. And then TD Ameritrade purchased Thinkorswim, and luckily there have been a lot of great opportunities there. People often talk to us about this big firm. Thinkorswim had 185 people. TD Ameritrade is 5,500. And so people always talk to us about, hasn't it hurt you guys, et cetera. And I would say absolutely not. Our CEO, Fred Tomczyk, he really is a great guy. And he said, hey, do your thing. I bought you guys for a reason. And so it's really been a great mix. And as we say now, we just have a bigger sandbox to play in.
And some of the original seed money for Thinkorswim, if I'm not mistaken, that came from a bank here in Michigan.
It absolutely did.
Yeah.
One of the very first banks, I believe, might be right down the street from you guys.
I know it, Michigan National Bank, and the reason I know that is because a very good friend of mine growing up is Paul Dunbar, who
okay.
Yeah, I'm sure you know Paul.
Yeah.
But let's talk
I know Paul very well.
Let's talk about your firm and TD Ameritrade, Thinkorswim. You guys have established yourself as just like the dominant leader in the industry for options trading, for stock trading, for for RIAs. I mean, you have a couple different platforms. Could you talk about the different platforms and services that TD offers?
Sure, thank you. Well, first of all, is our traditional grid platform. Those who have been TD Ameritrade clients for years will recognize, our web-based platform, which was recently updated. And again, just like as I said before, thank you for the nice words about our firm, but we also realize that, things can change quickly, and if you rest on your laurels, you're not going to be very good for very long. So we really try and always view ourselves as sort of the upstart with the mentality of, hey, we have to go out and beat everybody else. But that being said, our grid platform, as we call it, web-based trading, is a very good platform. It's a more traditional one, maybe for more traditional investors who might be more of straight stock traders. Great information on there in terms of S&P reports, et cetera. They can really dig down deep that way. Then we have our Trade Architect platform. What Trade Architect is done is it tried to be, many people, when they first see Thinkorswim, can get a little bit intimidated. It's got the black background, et cetera. So a Trade Architect is for those folks who were maybe from the TD Ameritrade world originally, who had more of an interest in options or more of an interest in, different types of products. So we built something that sort of eased them into it, made it very easy, very logical on where to go to get things, and it's sort of the next step. And then, as you mentioned earlier, our Thinkorswim platform can be used for the more casual trader. Tends to be used by the more advanced traders. You can trade stocks, options, futures, forex, whatever you would like on there. It's got incredible analysis tools in terms of breaking down your positions, et cetera. Tries to help you really relate the products to one another. So what we've tried to do is give people a platform wherever they want to trade. And then finally, our mobile products. We have Mobile Trader and TD Ameritrade Mobile. TD Ameritrade Mobile going more with the TD Ameritrade traditional website, and then TD Trader going with Trade Architect and Thinkorswim. And again, wherever you're at, we want to allow you to trade. To be honest with you, Joel, I travel quite a bit for my job. I probably make 40% of my trades on my iPad, just because I find the technology amazing and I can use it wherever I'm at. As you know, once you're a trader, you always want to trade. You woke up that day, so you're probably going to make a trade. And I just like to be able to do it wherever I want to do it.
Yeah, many different ways. But what if you don't know anything about options? You're totally intimidated. You want to learn about it. Talk about the services that Thinkorswim TD Ameritrade offers to new traders.
Sure, we offer tons is really the only way I can put it, of free education on our TD Ameritrade website. We do have actually even pay for education with our Invest Tools end, where they can get coaching, etc. We have on our Thinkorswim platform, including a couple of the networks that we have tied on there, we have 132 hours of free education every single day. And so we just want to make sure, listen, we know that our clients, in order to be with us for a long period of time, have to be educated. It's how we built Thinkorswim. It's how TD Ameritrade has really come out and made their mark in the world, in my opinion, is that we realize that for our clients to be successful long term, they have to understand what they're doing. And one of the biggest things, so I talked about defining your risk. I think that's one of the biggest things we do constantly is talk about define your risk, define your risk, define your risk whenever it comes to trade.
Get a quick question out of the chat here about the Canadian version of Thinkorswim. Is that something you guys had out for a while? Is there any promos coming out? How's that coming along?
Well, so our Canadian version, the way TD Ameritrade and TD Bank work, as many people may or may not know, the TD shield in front of us is the Toronto Dominion Bank, and Toronto Dominion Bank is approximately a 42% owner of our company. And I'll say approximately, I may be off by a couple percent one way or the other. But with that being said, the agreement is that TD Ameritrade is the U.S. platform. TD Waterhouse is the Canadian platform. So we've white-labeled the Thinkorswim platform to be used by TD Waterhouse up in Canada. It's got the same technologies you'd have in the U.S. It just goes under the TD Waterhouse sort of blanket of companies.
We're on the line with J.J. Kinahan. He's the chief strategist for TD Ameritrade, joining us from the floor of the Chicago Mercantile Exchange this morning. J.J., we only have a few minutes left here, but I'd like to ask you about your outlook for 2015 here. It'll be a little bit longer term. And I also just want to talk to you about, and I know I've heard Nicole Sherrod make comments on this. You guys get a lot. You look at what your clients are doing, and you look at the inflows and the outflows, and a lot of times that's a pretty good indication of market trends or market turns. Give us your outlook for 2015, and just tell us the unique way the way you use your customer data.
Certainly. So the first thing is my outlook for 2015. I would say that I think that this rally has a really, really good chance of continuing, particularly through the first quarter. We have earnings coming out in about a week and a half now. They start, and I think the earnings season is going to prove to be a good one because the many companies, as we know in the energy sector, suffered, but I really think that what you're going to see is that with the extra money in consumers' pockets, many other companies benefited significantly, again, particularly transportation type companies, retail companies, and I believe that the momentum from them will be enough to take us higher. Now, barring any major geopolitical event, and as you know, Joel, those are always on the horizon, and when we've seen in the past, they can sort of explode at any time. But I really believe that barring any geopolitical event, we have a chance for this market to go touch 2150 on the S&P 500. And that's really an area that I believe you'll start to see major sort of resistance. But I really think that we have a chance to go up there. You know, if you look at the options pricing for the first quarter, it's telling us that there's actually about a 32% probability that we'll go up there and close up there, and about a 50% probability that we can actually go up and touch that area. So I really feel that we have a chance here to do that. You know, the rates are very low. I think the biggest conundrum the market's having right now is that the bonds are now in pre-market. They're up here. Bonds up 5 days in a row with the market higher. VIX has been a little bit higher. So you can see that there's a real sort of shaping up of people kind of trying to figure out where to allocate. I think that the sector to watch, it's always the most important sector to me, is the financial sector, and that is because those stocks, even in an area where we have had low rates, they've been amazing at sort of managing their inventory. And what I mean by that is it's very difficult to make money when your bid or when the money you borrow and the money you lend, there's very little spread in between them. And so overall, that's been amazing. Going to our customer data, how we use that. We publish something called the IMX, and in fact, it'll be out this coming Monday. And what the IMX does is it allows folks to see what our traders are doing in terms of what they're actually trading. It's not a survey. Surveys kind of drive me a little crazy because on a survey, I'm 6'5", 275, ripped with muscle, and very good looking. In reality, that's not necessarily the case. You know what I mean? So what this does is it doesn't say what people might do. It measures people who've actually made a trade within the last month.
Wow.
And how are they participating in the market. And it was interesting for, you know, our December numbers, as I said, will be out Monday. In November, what ended up happening is our clients were net buyers of the market, but they actually cut back on their exposure. The way that can happen is they went with lower beta stocks. And so it's really kind of interesting to see if when it comes out on Monday. If you go to our website, you'll be able to see it. And I know you guys on Benzinga are nice enough to always talk about it. You know, you're one of our featured news services on the Thinkorswim and TD Ameritrade platforms that come in there every day. And I think what people will find is that if they overlay the S&P 500 with the IMX, this rumor that the retail client is dumb money will really be put to rest. The reason we started it is we were tired of hearing that. We talk to our clients all the time. We know they are not dumb money, and in fact, quite the opposite, especially those who, you know, engage with the market once a month or whatever. You know, I know we're running out of time, Joel, but the one thing I will say to people is that by trading smaller and engaging more often, I think you'll find that you're more comfortable. To me, it's kind of like golf. I used to be a decent golfer because I played a fair amount. I don't play much anymore, and I stink because I don't engage with the ball enough.
Exactly. All right, J.J. Kinahan, Chief Strategist for TD Ameritrade, joining us here on Benzinga's Pre-Market Prep. J.J., I think I could talk to you for about an hour and a half or so, but we're limited on time here. The reason, you know, we had you on, we wanted to hear your background and stuff, but we'd love to hear more about your strategies, short term and long term. We'd love to have you on again.
I'd love to be on again, Joel. Thank you very much, and all the folks at Benzinga. Hey, by the way, when I did the polar plunge this summer, it was because of Benzinga. You guys challenged me. You all have a very happy New Year. You're a great group there. Thank you very much, Joel.
Thank you.